The real estate space here in Sacramento is kind of in a strange space right now. I want to show you some graphs and tell you where I'm coming from. This first graph that we're going to look at is for sale versus sold versus pending. And I'm taking a 5-year look back, looking at it quarter by quarter, and you can see the trends that we've had. 2018, 2019, we had quite a bit of inventory versus solds. And you can see the pendings that have gone along with this. COVID hit and the market tightened up pretty severely. First of the year, when we started raising interest rates, you saw inventories go up quite a bit. And now here we are in this tightening again. As inventory decreases, the basic laws of supply and demand kick in, and you're going to see home prices increase. This graph here is showing you the dollars per square foot. Dollars per square foot. You can see that we've had an increase since the first of the year of dollars per square foot, meaning that home prices are going up. Average days on market, and that average days on market, and then the red line here is original sale price versus what it's sold for. And you can see that we're trending back up in terms of what they're selling for. We had some discounts going on when we had high inventories, but now homes that are priced right, we're seeing multiple offers on them. And you can see that the average days on market, they're decreasing right now. This next graph is tracking the for sales versus the solds, and you can see we've had an uptick in for sales, but the solds are tracking right along with them. This last graph is months of inventory, and I think this really drives home the story of what's going on in our market. And you can see that the months of inventory, they've declined drastically as we've gone through the summer months, the home buying season. And I think we're going to continue to see that for a number of different reasons. One of them is that homeowners are really kind of trapped in their 3% mortgage rates, and it's proving difficult for them to make that decision to list their home and sell. I'll bring this home with this article from Fortune magazine. This is Barbara from Shark Tank, and everyone knows who Elon is. And they're really looking at the commercial real estate market. And there's big problems in that market. I have been tracking it quite a bit. I've been seeing the defaults in the commercial loan market increasing. We have huge problems with office space. Office buildings in San Francisco are selling for 25 cents on the dollar. And you're going to see that trend continue. There's an estimated $360 billion in commercial paper that needs to refinance right now, and there's no liquidity to do it with, and the commercial properties just aren't performing like they were when they were originally underwritten. One reason why we have a lack of liquidity in the market, the Wolf of Wall Street points this out. The day after we reached this debt ceiling agreement, there was $359 billion in treasuries that were issued. Well, where does that money come from? Well, it comes from the liquidity markets. So essentially, your home loans, your commercial loans, we're now fighting for liquidity against T-bills, because the T-bills now, they're getting 7% on them. So that's my take on the market. I hope you find this information useful. I'll put the links to all this information in the description. If you like this content, share it with your friends, give me a like, follow me, and I'll catch you on the next video. Thanks.